Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had 2 directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Checking in on YELP GWPH PCLN TSLA and AMZN. I moved NVDA over to a semiconductors video I did over the weekend, so might as well check in on the sector and check out that video if you're interested in NVDA. So YELP is still very weak. The bulls are trying to form a low and a base of support down here, 32.99, 32.97, the low of the past 2 days. The bears have been in absolute control on this way to the downside, and they're trying to reverse this, but you can see the 4-period exponential moving average, this green line, has rejected every single bounce attempt, keeping the bears in control. The daily RSI is down at 21, so we can certainly anticipate a short-term bounce is approaching due to that fact, and I would be scouting. We could make a little entry now with that clear double base of support with a stop loss just below 32.97. Not a ton of risk to the downside if that level were to trigger. And the weekly time frame, we have the 50-week moving average support here at 32.70. Bulls are looking to bounce off of that level. As we can see, the volume is declining as the bears appear to be tiring to the downside a bit here. So the daily time frame needs follow through early next week, and this support level needs to hold. Otherwise, we're going to see continuation to the downside, waiting patiently for the bulls to find a new support level. But as of right now, the fact that Thursday and Friday, the lows were right at that level, does give a little bit of confidence to the bulls. GWPH had a nice bullish reversal hammer, bouncing off the 100-day moving average support of 120.87. The bulls need a green day Monday to confirm it, get back over the middle Bollinger Band, and try to have this level that we bounced off of 120.39 established as the higher low in this uptrend. So we need confirmation and follow through, and we need to see the bulls head back up to the 130 level. The weekly time frame did reject from the upper Bollinger Band 2 weeks in a row, pulling back. The middle Bollinger Band is still support of 119.54, and the bulls are looking, they have to break out above that upper Bollinger Band with a lot of bull volume. Otherwise, we are going to trade sideways for a while, waiting for these Bollinger Bands to spread out a little bit. PCLN consolidating. So liking PCLN with the correlation to the S&P 500 in terms of how they trade together. And when we saw consolidation in the S&P 500, we were looking for some further weakness in PCLN because of the gap up open and the close near the low of the day yesterday, or I should say on Thursday. So the key support was 1634 and 1628, and the fact that we closed so close to those levels on a weekday, knowing that SPY, the S&P 500, was opening weaker on Friday, we had weakness on our mind here for PCLN on Friday as well. So we did pull back. The break of 1628 led to further downside. We dropped to 1622, and a very key resistance level that's standing out to me on shorter term time frames for PCLN now is 1641. We rejected twice from that level on 2 bounce attempts Thursday, and then the end of the day bounce attempt on PCLN on Friday rejected from that level as well. So that's 3 rejections from 1641. If the bulls can get over that level in the short term, that will indicate a bit more strength than they have had recently. But we can see that these exponential moving averages, the 4-period and the 8-period, close to getting that bearish cross. We have not seen a bearish cross. It's been bullish in all of 2017, so that would be an indication of some profit taking coming. We have the key middle Bollinger Band support. That's going to be in play next week. It will be just under 1620 to start next week. And on the weekly time frame, we can see as of right now, this consolidation is certainly normal and healthy. The longer-term bulls are not worried. This looks like even a potential bull flag of consolidation. It's pretty contained. We are rejecting from the upper Bollinger Band, but seeing the strong move that the PCLN bulls have seen recently, we do have these little brief periods of consolidation before continuation. So again, I do believe a lot of it is going to be dependent on the S&P 500, which closed very strong right at the all-time highs on Friday. So continuation in the S&P 500, and we should see the bulls make another attempt at 1641. I did, however, notice that the correlation did break at the end of the day on Friday. We saw 45 minutes of the S&P 500 shoot to the upside, and PCLN didn't really have any of that upside. It was still pulling back from the rejection from 1641. So interesting to note, and we'll have to keep an eye on that correlation going forward. Tesla had a gap down open, and the bulls bought that gap down. It was the second gap down in a row, and we were oversold on the hourly and shorter term time frames. So we closed pretty strong up near the high of the day. This is a bullish reversal candlestick, and a green day on Monday will confirm that, and we'll be looking back at the middle Bollinger Band daily resistance, which will be right at about 264. We are still maintaining higher lows on the daily. 247.10 was this level of support. Bulls are now trying to form a higher low at 250.20, and if we break 247.10, that is going to be a clear bearish development in the short term, breaking the higher low pattern. So the weekly time frame had that bearish reversal candlestick, almost a gravestone doji, a little bit of a spinning top, and we confirmed it this week with a red pullback, and look what stands out. Look at that volume, increasing bearish volume. So that tells me this consolidation is likely not done at this point, and this consolidation will be normal and healthy. We could pull all the way back down to these moving average supports in the 220 and still be maintaining higher lows on the weekly time frame by a lot. Think of how far we've run here in the past 2-3 months. So consolidation underway, and watching very closely this resistance at 280. We have rejected from this level now 3 times in the history of Tesla, with a very clear level that is important in the future. We were rejected on the all-time high week. We had 2 weeks unable to close above 280. We closed right at 280 once here back in the summer of 2015, but 4 candlesticks rejecting, and then we had another 2 rejections these most 2 recent past weeks. So watching for some short-term upside, but anticipating a lower high to be set, perhaps at that daily middle Bollinger Band resistance. Amazon, bulls buying the dip here. Also a very strong name. This is a bullish candlestick closing at the high of the day. The gap fills at 848, and the bulls are looking up towards that all-time high of 860.86, and they're looking for this to be that higher low, continuing the uptrend. So the same thing, these correlations to the S&P 500 are pretty strong on these big names. Amazon is another one that's pretty consistent. So watching very close, if the S&P 500 continues its bullish momentum run here, we will look for Amazon to head back up towards 850 psychological resistance, which would be right after that 848 gap fill, and then that all-time high. And the week time frame that we do need to be aware of is a bearish reversal candlestick from this upper Bollinger Band. It shows indecision after a strong move to the upside. So the red flag for the bulls would be a loss of the low of Friday of 837.75. That would show definitely a step back, because we would have a lower high and then a little lower low on this little bounce attempt. So definitely watching the S&P 500 for strength on all of these names, and watching for these names that are coming off their recent all-time highs, PCLN and Amazon, seeing if that consolidation in the market will lead to consolidation in these names, which I do anticipate it will. But again, the market does not have signs of consolidation at this point, so it does favor the bulls short-term heading into Monday, especially if that S&P 500 gets a new all-time high right in the morning. So I appreciate you watching. Certainly a lot to be watching here as we are near the top, and personally, I would not be comfortable holding swing trade bullish positions with the market where it currently stands. I'm certainly not going to be looking bearish yet, but I would want to be a lot more cautious up here, as we know we are pretty overbought to the upside, and certainly would want to protect and not be buying at the top, as we know consolidation is coming in the near-term future. So I appreciate you watching. Hope you have a great rest of your weekend, and we'll see you on Monday.